Today is my favorite segment of my channel, Your Questions Answered. And your question of today's video comes from Sven, who asked me, if I earn $50,000 per year from superannuation income stream, and then I earn another $18,000 from the bank interest, is that $18,000 tax-free, or is that added to the $50,000 and that sets the tax rate of 32%? Or I earn $18,000 in fully franked shares on the top of my $50,000 in super income. What are the numbers then? Thank you very much for cleaning this up. P.S. I think I will be coming to you closer to my retirement. Love your stuff. Best of all, thank you, Sven, for your question. Thank you for following up my videos, and I am looking forward to speaking with you soon. So today we will try to tackle this tax/retirement question together. My name is Katherine Isbrandt from About Retirement. I'm a certified financial planner, and you are watching About Retirement TV, the place that I created for all Australians that are either getting ready for retirement or have already retired and want to improve their financial outcomes for better, safer, and more meaningful retirement. So today I'm trying to answer Sven's question about income earned in retirement, and we have a couple of scenarios. Scenario 1, $50,000 income earned from superannuation income stream plus $18,000 interest earned from bank deposit, for example, term deposit. What is the tax bill in this scenario? Well, first, the most important aspect of this is the income of $50,000 from your superannuation income stream. There is no tax payable on income received. What's more, this income is not even part of your taxable income. It does not need to be included in your tax assessment. Therefore, if you can disregard for tax purposes that $50,000 income received from your super fund, then it means that only $18,000 is your taxable income. Considering that this level of income is below our $18,200 tax-free threshold, there is no tax payable on income earned from cash. Obviously, if your income earned from investments is greater than the tax-free threshold, then the tax bill will be calculated as per usual formula, as per marginal tax rate scale. So you might be satisfied with the outcome of scenario 1. But let's have a look at scenario 2 now. Scenario 2, $50,000 income earned from superannuation income stream, and then another $18,000 earned as fully franked dividend from Australian shares. So what is the difference between income earned from term deposit or any other cash bank deposit and fully franked share dividend? Well, fully franked share dividends are best tax idea introduced in Australian system. Similarly to scenario 1, your $50,000 income from your superannuation income stream is fully tax-free. We have already established that before. Your $18,000 dividend income is also below the tax-free threshold, therefore also not subject to income tax. But it gets so much better than your term deposit, because shares have what we call fully franked credits attached to your dividends. I will create a separate video to explain in detail this very important aspect of Australian tax system. And unlike most other rules in our tax system, that favor high income earners, this one works for most retirees and super funds as well as pension funds. The lower your tax rate, the better your benefit. That's the unintended outcome and a benefit earned from Australian share dividends. So as per option 1, you might be very happy with your outcome of not having to pay any tax. However, in scenario 2, where your income comes from share dividends, you will not only not have to pay tax, but you will actually be eligible for a tax refund. That works this way. Dividends received from your bank account to $18,000. On your dividend statement, you will receive the information of the level of franking credits attached to your net dividends received in your bank. If your income from shares has been $18,000 net with fully franked dividends, that means that your grossed up income must have been $25,514. So the difference is the amount of $7,514. This is the amount you can claim at the end of each financial year when you complete your tax return. Why are you receiving the tax refund? It is because franking credits represent the tax a company has already paid on any profit it distributes to shareholders as a dividend. So as you can see, there is a great deal of difference in earning income from cash or term deposits and shares. To earn income of $18,000 in cash rate or dividend rate, you would need approximately $360,000 invested. Scenario 1, you invest $360,000 into a term deposit at 5% for 12 months. Your return earned is $18,000, and as discussed before, if this is the only taxable income you have, there is nil tax to pay. Well, you might be very happy with this outcome, but scenario 2, while your investment of $360,000 into Australian shares that pays fully franked dividends, you receive a net dividend distribution of $18,000, but those dividends also come with attached franking credits of $7,514. That means that the full grossed up dividend actually, as I said before, is $25,524. So which scenario gives you a better outcome? Can you see now how beneficial it is to invest into Australian shares and derive income with fully franked dividends? This is your reward for investing into a more volatile world of shares and supporting Australian businesses. I do hope this explanation makes the comparison clearer. As mentioned before, I will create another video to fully explain the issue of franking credits, as it appears to be very confusing for many. This is why those who understand this amazing tax system will concentrate on investing into Aussie shares. But please do not forget that diversification is still essential. If you enjoyed this video, please give a thumbs up and subscribe to this channel, as I really appreciate your support. Also, to keep on going, please understand that YouTube judges channels by number of subscribers and supporters, and if I don't get those, my videos will not be shown to as many people as I would like to help. I also invite you to visit my website about retirement.com.au, where you can find hundreds of articles and videos to learn from, all devoted to the aspect of finance, retirement and investing. And while you are on my website, sign up to my newsletter to be updated with all the changes that can impact your retirement. If you are looking for a good financial planning advice, best strategy, how to set up your savings for the best retirement income or Centrelink outcome or tax outcome, just book a meeting with me through my website. On each page, there is a button, Book a Meeting, that will take you to my calendar, where you can book the day and time for us to meet and discuss your personal plan or financial issue at hand. And now please continue watching my recommended videos. With the first one, you are ready to retire, and now what? Steps to prepare for retirement. Long title but lots of information. After all, preparation is the key to successful retirement. And the second video, how to invest $1 million for the best retirement. I hope you will learn a lot, and I will be speaking with you in my next video. Bye!